Hi traders, welcome to my Forex video tutorial. In this tutorial today, I shall be going through this easy Forex strategy, that I believe any traders can trade. Irregardless of whether you're just a beginner, you're intermediate trader or advanced trader, basically you can use this strategy to make profits. Okay, and let's go through what exactly this strategy is all about. Okay, the key to Forex trading lies in a high risk reward ratio. Okay, which means that for the amount of risk you're putting into a trade, you must have a higher rewards for it. Which means, that example, for a trade, let's say I always set a stop loss of 20 pips for the trade. I must make sure that the target profit is at least 40 and above, which makes the risk reward ratio 1:2. If it's higher, it will be even better. It will be better if 1:3, 1:4. Okay, the key is have high risk reward ratio. Okay, and number two is the ease of execution. Okay, most new traders think that a good strategy is one that is very sophisticated, which means that it has a lot of indicators. It's very hard to execute, and you are totally wrong. Okay, so basically, if you actually manage to take a look at the strategy used by a professional trader, you'll find that the strategy is very easy to execute. It's so easy that you don't believe it sometimes. When people tell you that it works, you don't believe it. Okay, basically the key to trading is basically high risk reward ratio, ease of execution, and if you have pinpoint entry and exit, you know exactly when to enter and where to exit your trade. Okay, so with this three factor, I can say that you have a very good strategy on hand. And therefore, in this video tutorial today, I shall be showing you this easy Forex strategy with this three factor within it. Okay, so let's go through what this strategy is all about. This is actually known as a 200 EMA strategy, and the indicator requires is just 200 EMA exponential moving average. You just said plot 1, 200 exponential moving average, and a Fibonacci indicator. Okay, this 200 EMA is in fact voted as the best Forex indicator in a trading magazine by traders, in fact. Okay, and the reason why it works is because it is very good. It serves as a very good trend indicator. Okay, it can actually tells you a trend, very reliable. And it serves as a very strong support and resistance. You see that most of the time when the price hit 200 EMA, they get repelled by it. If you manage to cross above, you'll find that most of the time you actually move higher. It means that the trend has reversed. Therefore, the 200 EMA is a very reliable indicator. Okay, so now let's take a look at how you actually use this 200 EMA as a trend indicator. So let's take a look at the chart. Okay, so what you're seeing here, is actually the pound dollar hourly chart, and this black line that you're seeing here is actually the 200 EMA. As you can see here, can see it's sloping upwards. It's actually telling us that you're in a very strong uptrend. Okay, when it slope upwards with a steep gradient, it's a strong uptrend. If it slope downwards with a steep gradient, it's a strong downtrend. Okay, let's see an example. You can see here. Okay, here this part onwards start to show that it's a very good downtrend. Look, when it's flat, totally flat, is actually consolidating at the moment. Okay, so let's take a look back at this. So the second part here is telling you that it's actually a strong support resistance. So you can see it from this picture here. So next, let's go through the strategy. Okay, so basically there's 3 steps to this Forex strategy. Number 1 is to identify the trend of the market using a 200 EMA. You need to know whether it's now in an uptrend or a downtrend. And number 2, you have to wait for the price to hit the 200 EMA for the second time. Very important. Okay, it's not the first time. You must make sure that it hit for the second time, which then you enter a trade in the direction of the trends. Okay, the Fibonacci indicator is basically optional. You can actually draw it out. Okay, if the price hit a Fibonacci level together with 200 EMA, it means that it's a very, very strong support and resistance level. It just gives you additional confirmation. But in fact, with this 3-step using 200 EMA is good enough. So let me show you an example here. Okay, let's take a look here. You see here, this chart here, you can see that the price from below moved up, moved down, moved up. Okay, hit the 200 EMA for the first time, get repelled by it. You can see that, get repelled by it, and it started to move up, telling you it's a strong uptrend. You can see that, and this is the second time it hits the 200 EMA. You can see that. Then this is where we enter a trade. Once the candle closed, we enter a trade, and you can see this is the profit that we make. It's 240 pips, 14 pips. But basically, as a trader, we don't take full profit because you do not know when the price is going to reverse. So for me, when I trade this 200 EMA strategy, I always set a stop loss of 25 pips and take profits at 50 pips, which give me a 1:2 risk reward ratio. So in fact, I have taken profit somewhere here. Okay, 1:2 is a very good risk reward ratio. You find that you win most of the time, because some people will say that why don't you just set 1:5? Because there are times where the price move up to 50 pips, 60 pips, you start to reverse, and you make nothing out of that. So from my experience, right, and testing, I found that 1:2 is one of the best return. Give me the best return. Okay, using this strategy. Okay, so one thing I need to clarify is this. Some people say that this is consider the first hit. No, because you'll find that actually the price moved down. Okay, first hit means that it hits exactly, then the price starts to move higher. You must make a higher high. Okay, higher high and don't cross below. That means no new candle below. No new candle below, and you start to move down. This is the second hit, then we enter a trade. Okay, so I hope that you understand this, how this strategy works. Okay, now let's take a look at an example here. Okay, so can you see here, the price actually move up and we start to move below the 200 EMA. So what we wait is for the first hit to occur. So you can see here, the first hit occur here. Okay, this is what we call the first hit. Okay, some people may think that this is the second hit. No, you must make sure that the price make a lower low than here. This is the lowest point. You can see it must move below here, and the second time it hit, right, that's where we enter a trade. So can you see here, it start to move here and start to move down. Can you see it actually create a lower low compared to here. Can you see lower low, and I wait for a second hit of 200 EMA, which is here. Can you see it hit the 200 EMA here. So what we do, we enter a trade here exactly and take profit 50 pips. Okay, although it moved 160 pips. So 50 pips, we just exit, we have 1:2 risk reward ratio. Right, the key, right, is a consistency. For a good strategy is consistency. You have a trade every time you make about 1:2, very consistent, and you have high winning percentage, and you'll be profitable at the end of the month. Okay, so I hope that you guys enjoy this Forex video tutorial that I prepared for you. This easy Forex strategy. Okay, basically it's very easy to execute and it really works. So for more Forex indicator tips as well as trading strategies, right, you can actually visit my website at forexindicator.org. Okay, this is where actually I provide what I know. So let's take a look at my website. Okay, so basically this is my blog, forexindicator.org. And here, right, I talk about the indicators that I'm using and how I used it in detail. Okay, as well as this side here, I talk about the strategy that I'm using, and actually 200 EMA strategy is here. Okay, I actually write a blog post for it. As the bottom here, there's Forex FAQ, whereby I answer questions from the subscriber of my free newsletter. They simply ask me questions and try to answer them twice a week. Okay, these are the questions that I've answered. You can just come and take a look at what are the problems that other traders are facing. And on this part here, you can just sign up for our newsletter, which is actually free. Okay, and basically for this newsletter, currently there's about 6,158 subscribers to this newsletter here. Okay, so I hope that you guys enjoy this video tutorial, and for more trading strategy and tips, you can just visit my website here. Okay, I'll talk to you again.